Well, yes, Indigo will definitely remain in focus because if you look at Q2 generally is a seasonally weak quarter for airlines, but this time around the second quarter of FY26 is expected to be weaker than the normal. Now this is because if you look at the domestic air traffic for the first 2 months of this quarter, it is down nearly 1.7% on a YOY basis, and Q2 might record the first YOY decline in many quarters that we are seeing currently. Now if you look at the data here, for the second quarter so far we are seeing total air traffic of 260.2 lakh passengers, while the daily air traffic is at around 4,19,745. On a Q-on-Q basis, yes, the downtick is sharp, around 10%, but that is also because Q1 is seasonally strong. But on a YOY basis, we are seeing a downtick of close to 2%, and this could be the first quarter, as I was mentioning, that first quarter in many quarters that there could be a downtick in the air traffic, even in a seasonally weak quarter. However, on the positive side, the international air traffic that continues to remain on the stronger side. A lot of growth has been seen when it comes to domestic players. On a YOY basis, we are seeing a growth of around 5%. Again, on a Q-on-Q basis, yes, there would be a downtick, but that is because Q1 is seasonally strong and Q2 is seasonally weak. But on a YOY basis, yes, we are seeing a strong growth of around 5% when it comes to international air traffic. When it comes to the passenger load factor, which is a measure of capacity utilization of any airline company, here also, if you look at the passenger load factor number, that has remained pretty much stable for Indigo at around 85% as against 83.7% that we had seen in the previous quarter, and this is largely because Indigo has cut capacity by around 12% since the 2025 peak. Now 2025 peak was seen in February 2025 when Indigo was managing around 2,300 flights on a daily basis, and currently they are managing around 2,033 flights on a daily basis. So it's a downtick of close to 12%, and this has helped them to maintain their passenger load factor on a higher level compared to on a YOY basis. Now if you look at the valuations for Indigo at this moment, the 12-month forward valuation stands at 10.3 times, which is a discount to its 5-year average of 10.7 times. While analyst community continue to remain quite bullish on this counter, the consensus target price stands at around 6,350, which suggests an upside of around 13%, while the highest target price on the street is at 7,256, which suggests a potential upside of close to 29%.